Hi, everyone. Thanks. I'm Martin Turenne, President and CEO of FPX. Thanks for coming to our session here. Getting right into it, FPX is a fairly straightforward story. We're focused on the advancement of a pre-feasibility study stage nickel project in British Columbia. The project is called Baptiste, and we think it represents a new innovative source of nickel for both the stainless steel and the EV battery supply chains. It is a project that is gaining real momentum with support from the provincial government of British Columbia, federal government of Canada, and importantly, we value our partnerships with First Nations communities and rights holders here to advance a project that can help Canada transition to a low-carbon economy, as well as enable that global transition at the same time. The project is located in central British Columbia. It's located about 80 kilometers to the west of the Mount Milligan operation, a large copper gold mine, which represents a good precedent for the permittability of large projects in BC. Also about 200 kilometers to the south of us is the Blackwater project, another large-scale open-pit project that has been recently permitted, is currently in construction, and will have its first production later this year. Baptiste sits within a larger land package we call Descartes. The Descartes district, as we call it, sits within the traditional territories of 4 First Nations, the Clausen Nation, Binche-Wuten Nation, Takla, and Yakuchi Nations. These are groups with which we have very positive engagement, and we are committed as a company to a collaborative and consent-based decision-making framework here that is aligned with the principles of the United Nations Declaration on the Rights of Indigenous Peoples. We see huge opportunity here to work collaboratively to protect the environment and to ensure that there's maximized benefits for First Nations rights holders in the area. This is a different type and a new innovative style of nickel deposit, as I mentioned briefly earlier. It's not a sulfide, it's not a laterite. The nickel here is hosted in a mineral called awaroite. The main difference between awaroite and sulfide nickel is the absence of sulfur in the chemistry of the mineral itself. So the stoichiometric chemistry of this mineral is Ni3Fe, so 3 parts nickel, 1 part iron. That's as opposed to a sulfide mineral, which typically contains sulfur along with nickel and iron. There are several occurrences of awaroite in dozens of countries around the world. We think there's prospectivity for other deposits of this type to be found, but this is the first of its kind. We are doing something new and innovative with this deposit. The mining industry is often the race to be second, not the race to be first. We are the first here, and we think we're going to be creating value not just for this project, but unlocking a new deposit type for the rest of the nickel industry. The main advantage of the awaroite style of nickel deposit is twofold. One, it is hosted in a very clean host rock environment. With the lack of sulfur means there's also a lack of deleterious and acid-generating elements. That allows us to have a very clean process of recovery that has a more limited environmental footprint versus typical sulfide-based mining operations. That cleanliness also leads to advantages from a downstream standpoint, which I'll speak to in a moment. The other significant advantage of this style of mineralization is it's highly magnetic. This mineral, therefore, can be recovered using magnetic separation and not whole ore flotation, which is typical in sulfide operations, and that has significant cost and efficiency benefits. The flow sheet is shown here. I won't itemize every element of this flow sheet in detail. This is a large, very homogeneous ore body with a relatively low grade of nickel, about 0.21%. But we can get very high recoveries of that nickel using a very simple process, one that is not bespoke or requiring any new technologies or equipment, but using standard unit operations that are widely used in the mining industry on other deposit types. So crushing and grinding and magnetic separation leads to the rejection of 95% of the fresh plant feed to tailings. That leaves a very small footprint of magnetic material that then goes through a very modestly sized flotation cells to produce a very high-value product. And that product then has tremendous utility in both the stainless steel and the EV battery supply chains. Important to note the very high nickel content. This concentrate grades about 60% nickel. That's as opposed to the sulfide cons, which are typically in the range of 10 to 15% Ni. And that really is due to the stoichiometric chemistry with a high nickel content of the awaroite mineral itself. This concentrate, on the one hand, can be agglomerated into a pellet or into a briquette and can be fed directly to stainless steel producers. On the other hand, it can go into the EV battery supply chain through a very simple hydrometallurgical process. So we've done test work with Shared Technologies, which is a leading hydromet nickel specialist group based in Canada, that shows that we can very simply produce a battery-grade nickel sulfate crystal, which is shown here in this image, in a process that implies a lower number of steps to market than the sulfide or the laterite option. So the laterites typically go through what's the HPAL process, which is infamous for its complexity and high cost, and has multiple stages of processing before the sulfate can be produced. Conversely, sulfide concentrates typically have to go through a smelting stage before going through further refinement to then ultimately be recovered to the sulfate form. The advantage of awaroite, again, is the ability to bypass smelting, to go through very moderate pressure oxidation steps to then recover the nickel into solution and finally into the sulfate form. That implies lower costs, lower transport costs, and a quicker route to market to get into the batteries. To that end, we have received some federal funding from the Government of Canada under the Critical Minerals Strategy Program, and we expect to make further announcements on potential additional funding throughout the course of this year. This is a nice sort of validation of the interest I think that the government has in this project as being key to the country's critical mineral strategy. More recently, we've announced a strategic investment in our shares from Sumitomo Metal Mining, which is Japan's largest mining and metal processing company. Sumitomo is one of the largest non-Chinese, non-Indonesian nickel producers in the world. They have significant ambitions to effectively double their nickel production over the coming decade. They're having to now look to potential partners in Canada and Australia and elsewhere to achieve those production objectives. And so we welcome their investment. A situation here where they took a 9.9% interest in us earlier this year in a private placement where the shares were priced at a 70% premium to our market price at the time, really showing their interest in the project and the fact that we are able to kind of negotiate strong equity financings on the basis of multiple interests from multiple different parties to ensure that we're doing the best to represent the interests of existing shareholders. Prior to that investment last year, we also announced an investment on the stainless steel side from Outokumpu. This is a Finnish company, Europe's largest stainless steel company. This is a novel type of investment for Outokumpu, not a group accustomed to making investments in junior mining companies. However, Outokumpu is a company that really faces some existential questions around being able to maintain its production of low-carbon stainless steel, which is a key differentiator for them versus the Chinese alternatives for stainless steel. A company that's been historically reliant on Russian nickel as part of its feedstock. That has become more complicated for them now, given the political situation in Russia and the Ukraine. And so they're having to diversify their sources to friendlier countries, which is a theme we're obviously also seeing on the EV battery side as well. One of the initiatives we've undertaken over the last year that I'm proudest of is an exploration alliance with the Japanese government via its JOGMEC agency. JOGMEC has recognized the potentially disruptive characteristics of awaroite to provide battery-grade nickel to the benefit of the Japanese economy. And so we are about a year into a program now that we envision to be multiple years, whereby the Japanese government is funding our geologists to go out and try to find other deposits of this type around the world. That funding we recently announced is being accelerated and expanded, and we think this will lead to some interesting projects. And all of this is occurring at present at no cost to FPX shareholders, with all of that work being funded by the Japanese government. So more news to come there in terms of potential discoveries that we might make. Finally, in terms of another aspect of the Japanese ecosystem that we've been interacting with is our supply chain agreement with a company called Prime Planet Energy and Solutions. Not a household name at this time, but this is Toyota's battery company. It's a joint venture company between Toyota and Panasonic, currently building a gigafactory for battery production in North Carolina. Again, very focused on getting a domestic or a North American secure supply of nickel to feed their supply chain requirements going forward. And this is a theme that I think we will continue to see in this market as more and more battery plants get built, as the midstream continues to get built out in Canada and the United States. You will continue to see upstream interest expressed by these downstream players. If they don't have a source of nickel, they simply will not have operating plants. They will have plants that sit idle. And so for upstream players like us in the mining industry, this represents a very important new source of capital. And as demonstrated, we've been able to kind of bring that capital online in a way that is priced significantly above where the shares trade in the market. That is the nature of true strategic investment. And what it allows is for retail and institutional shareholders to feel secure buying in the market, knowing that future financings that we do will be priced above whatever the market price at the time of that financing is. Quick highlights here of our recent pre-feasibility study. We're now in the early stages of work towards a feasibility study. The PFS yielded very good economics, a relatively low cost of production in the bottom quartile of the cost curve, $3.70 per pound of nickel contained. Current nickel price is in the region of just over $8 US a pound. This represents kind of safety and from a margin standpoint throughout the nickel price cycle, which can be very volatile. Importantly, this cost per pound does not include any byproduct credits, though we do think there are some opportunities there in future studies to yield some benefit. A 29-year mine life, annual production of 132 million pounds or 59,000 tons of nickel per annum would make this one of the largest operations in the world. And again, the key here is producing a product that it can be more readily integrated into the supply chain without having to go through that smelting stage. That means higher payabilities and better returns to the operator. Also, just as important as positioning on the cost curve these days is where your metal production is positioned on the carbon curve. Our PFS work suggests that we will have a carbon intensity of about 2.4 tons, which means we're emitting 2.4 tons of CO2 for every ton of nickel produced. We see very low-hanging fruit opportunities to reduce that figure significantly in the next stage of study, and we'll have more news on that in coming months. This is a slide of particular interest to downstream players. I talked about the importance of low-carbon nickel to groups like Outokumpu in the stainless steel supply chain. It's also hugely important to car makers. This is, I think, one way in which European, North American, Japanese, and Korean automakers will be able to distinguish themselves from Chinese competition is the cleanliness, the high ESG, and the low carbon intensity of their supply chains. That will be a key differentiator for how they market their products going forward. We still, though, see some degree of frustration as a management team in terms of how our shares trade. We still think that there's misunderstanding of the novelty of the awaroite mineralization. We trade at a multiple of about 0.04 against our project NPV. We certainly see that there's room for us to re-rate going forward. One of the keys for that, I think, is the metallurgical test work that we continue to do. We just recently put out results of a pilot scale study that clearly demonstrates robust recoveries at a very high scale of operation and really validates the flow sheet that we've developed at the bench scale. Beyond that, we think the validation from the strategic partners that we've taken on, as well as potential new strategic partners going forward, will continue to validate us and lead to the potential for a re-rating. Very quickly here, the company is very well funded. We have about $44 million Canadian in the bank that will fund us into Q2 of 2026. So we do not see any fundraising requirement for quite some time. We have a high degree of management ownership of the company, about 14%, and certainly see some opportunities here for upside for people looking at the story. Thanks very much.
Thank you, Martin. That's it. Next, I'd like to welcome to the stage